ZincOx is an AIM-listed company that we interviewed back on the 28th of January this year. Last time we spoke to the Chief Executive, Andrew Woolett. He explained to us that the company had become refocused as a dedicated recycling company, which was just beginning to develop its first project in South Korea. And Andrew Woolett joins us now. Welcome back.
Thank you very much.
Just briefly remind us what the company does, first of all.
Well, essentially, excuse me, we take a waste generated by the steel industry, which we get for free, and we recycle it. And we produce a very high grade, high quality zinc product, which we can sell to zinc smelters, who then make it into metal. And that accounts for about 90% of our revenue. The rest of the material ends up in an iron bearing product, which is of lower quality, but we can sell it back to the steel mills who gave us the dust in the first place. Now, this is a very new technology. It's a new application of an old technology, if the truth be known. And it really does have global implications. It allows us to totally look at the way this waste is treated. We can treat it, because of our superior economics, as a valuable raw material rather than a waste material. And the first place we intend to roll it out is in South Korea.
It sounds as if it's just like a mine, really.
Well, it is in a way. In fact, if this was a mine, it would be the fifth biggest mine in the region, including China, producing 92,000 tonnes a year of zinc in concentrate at full production. But there are two very important ways in which this is not like a mine. First of all, mines always have a finite life. There's a reserve which they're mining, and at the end of it, you have to replace the reserve by finding something new. That's not the case here. Basically, when this plant is built, it'll go on forever. And the second important way is that a mine basically has, a cost of operation. If the price is above that, they make money. If it's below, they don't. Our situation is rather different. We've negotiated our feed supply contracts so that we have a variable operating cost. So that at higher zinc prices, we have slightly higher operating costs, but most importantly, at lower zinc prices, we have lower operating costs. And that means that we're pretty much going to make a profit at any imaginable zinc price.
So what's the current status of your flagship Korean project?
Well, we've made huge progress. The bottom line is we're on budget and we're on schedule. But I think the easiest way to explain the progress that's been made is to look at some pictures, and I think we're going to show those as I speak. Essentially, we've completed now 90% of the buildings, all the civils are completed, 90% of the major pieces of equipment are installed. We've made a good start already on the electricals and the piping, and we should be ready to start the commissioning of the first parts of the plant in the beginning of next month. But we remain on schedule to have ourselves starting production on the 1st of February next year. So there's a commissioning period before that, and then after production starts, we should be ramping up to full production somewhere towards the sort of third quarter of next year. As far as the budget goes, we have a budget of $110 million, of which $5.8 million is contingency. Now, we've spent and we've tied down 85% of those costs. And of the outstanding costs, we've done a detailed analysis, and we're pretty sure that of the $5.8 million, we'll only use $500,000, which is a remarkable testament to the development team. However, unfortunately, exchange rate movements over the last 9 months have worked against us. So I think at the end of the day, we'll probably be about $500,000 under budget only. And I think one of the reasons we've managed to have this success is we've had first-class engineering contractors, Exmatec, who were part of the Korea Zinc group.
What is Korea Zinc?
Well, Korea Zinc are the sort of biggest players in zinc in Korea. They are I think the second or third largest zinc producer in the world, and they have a huge facility about 60 kilometers away, producing 460,000 tons of zinc a year. All that zinc has to be imported. So they were very interested in our project, as it would supply over 15% of their feed. And as a consequence of that, they provided some loans to us for the development. So they provided 2 loans amounting to $50 million, and those loans are drawn down in 4 tranches, and we've already drawn down 2 of those tranches.
So what's the value of the project then?
Well, the first phase of the project throws out about $31 million of EBITDA and has a 28% return on investment. So compared to our market cap today, it's a very significant figure.
What about the second project? What's it, KRP2?
Yes, well, I think people do see it as a second project. And while it is a second rotary hearth furnace, which is a second lot of equipment, if you like, it's really just an expansion of the first project. The project itself and the amount of dust we have under contract will be enough to produce 92,000 tonnes of zinc a year. but we're developing in 2 phases. So in fact, the first phase is fully financed, we're 3/4 of the way through development, and as soon as it's up and running, we'll move to the second phase. But it's really all part of the same project. I don't think the market's fully really realises that at the moment. Now there's one hurdle to go, because the layout's there, the engineering, we know what we're going to do, the dust is there, the feed is there, but it's the finance. And we spent quite a lot of time over the last 6 months looking at the finances of the project. Financing, and one of the reasons we decided to develop in 2 phases was so we could use more third-party finance, bank finance for the development than would be the case for phase 1 alone, or if we built it in one go. And really, when we're up and running in phase 1, then phase 2 will be quite simple and a much lower risk profile for the banks. So we see it as one project of $210 million. So 110 for the first phase, 100 million for the second. We've been talking very seriously to banks, and they've indicated that they'll lend somewhere between $100 and $120 million. They will require a hedge, and the range of their lending depends on the level at which the hedge is put in. They'll also want first security on the assets, and at the moment that's with Korea Zinc. So the first thing we'll do after we get the loan is to retire the Korea Zinc loans. We'll leave our equity in the project, and that'll leave a shortfall between $50 and $30 million, which we will fill with another subordinated debt, offtake loan, provided for the production from phase 2.
But why wouldn't Korea Zinc do it?
Well, I think they're the natural people to go to. We will have just repaid them the loan on phase 1. They continue with the phase 1 production, and obviously, therefore, they've got the cash, and they've obviously got the interest in the product.
In terms of the metal itself, like other base metals, zinc has suffered. What's your view on that, and how does it impact on your operations or potential operations?
No, that's right. I mean, I think we all have to look for China to maintain this huge growth in commodities. I think there are a couple of other additional factors, though. There are 2 large mines closing over the next couple of years that will have a really significant impact on the amount of new zinc being produced in the world. And then in China itself, I think there's great cause for optimism, if you like, which goes beyond what you would see perhaps for other metals. And that is that zinc is usually mainly used for galvanizing, and this is protecting steel from corrosion. But in the case of China, where labor is so cheap, it has traditionally simply been painted with rust-proof paint. Now, it's nothing like as effective, but it's far cheaper. And what we're seeing is a huge increase in the amount of galvanizing being carried out in China. And the other effect, which is very important, is zinc traditionally has had very poor producer discipline. But we're seeing now in China where there are 10,000 zinc mines, which are really mom and pop operations, which are incredibly sensitive to the zinc price. So if the zinc price comes off, there is immediately less production. And that means that we're looking at a much more disciplined market for zinc. And I think these factors combined make it a very exciting future.
One final question has to be, what other projects have you got in the pipeline?
Well, we've been working in a number of fronts over the last 6 years, and Korea really was the first to get over the line in terms of financing. But we've done a lot of work in the States, in Thailand and in Turkey. And over the course of the next year, as we bring KRP1 on stream, we intend to push forward with those projects very strongly.
Andrew, thanks for joining us. Andrew Woollett there is Chief Executive of ZincOx.
This film is for educational and leisure purposes only. Proactive Investors does not provide investment advice. The company is a publisher and is not registered with or authorized by the Financial Services Authority. Please refer to the full terms and conditions on the Proactive Investors website.